Okay. Hello, everyone. Welcome from Malaysia. We are in Malaysia now. We are live from our FEW Ask FEW Anything weekly show. So I'm Coco. I am FEW Malaysia's ambassador, and I'm very happy to welcome members from around the world, namely also all the Malaysians who are tuning in. We're going to have more Malaysian guest speakers. We're going to have more events around here as well. So today we're going to talk on a topic that is very much talked about in this pandemic, because everyone knows that in times of trouble, the stock market goes down, and is it a good time to buy or sell or whatever? Okay, so I have no idea of any of this. But let me introduce Kathlyn, because she is like a very, very experienced person, not only in trading herself, but also in helping others. So let me give you a little bit of background of what she does. So basically, Kathlyn is the founder of Beyond Insights. Beyond Insights is an award-winning investment and trading education program that has helped and trained and coached over 4,000 investors and traders, and also to help them get consistent results. And I think that's a key word, consistent results, because when we're trading, we don't want to win and then lose it all, right? She's also a professional trader herself who has earned her wealth through investment and trading in US and also in other global equity markets. She started her stock trading journey in 1993 and is now primarily trading in US stocks, options, CFD, commodity futures, actively around the world. I'm going to ask you what these terms mean soon. I don't even know what they mean. Okay, so welcome. Thank you very much for joining us today. So let us start with our topic. So whether we should trade and how we should trade, why women should invest, and how to get started. So I know a lot of gurus and people around the world say if we do not invest our wealth, it will depreciate.
Yes, definitely.
In time to come. But for me, I have been burnt before. So that has caused me not to be quite as aggressive as I was when I was young, because now that I have a family, it's like, okay, what do I do? And also when you have your own business, you're more careful in a way. So why do you think women should invest?
Yeah, in fact, I think everyone must invest, okay? And especially for women, it gives us a lot of flexibility, right? So I don't have kids, but I know a lot of women have kids, and investing and trading gives them the flexibility. If you can earn a living through investment and trading, right, you have a lot of flexibility of time to take care of your family. But that's just one side of it. Why I feel that everyone must learn how to invest is because our inflation rate, like at least in Malaysia, is about 5 to 6%. Right. Although the government published statistics is about 3%, mainly because they just take a few core essential goods.
Right.
And the bank interest rate. So what's the bank interest rate? Right, in Malaysia is only about 2-point-something%. Right, the most you get is about 3%. So that means technically, if you keep your money in the bank, right, you cannot cover inflation, the price of goods going up. Right, and when it comes to career, right, what is the annual increment for most people? Average increment for most people. What do you think?
I have no idea. 5%?
Yeah, it's about 5%. 4 to 5% for some companies. So you say the annual increment is 4 to 5%, but the inflation rate in Malaysia is 5 to 6%. So you see a problem there, right? You could get your salary increment every year, and yet you cannot cope with inflation. Unless you are outstanding employees where you get higher, increment, but that may not happen every year.
Right.
So, and I actually work out for myself. Even though I started trading in 93, I never took it as seriously until I did my financial plan. That was when I was working for Intel. I worked for AMD for 5 years and Intel for 12 years, right? So 17 years in the corporate world, both semiconductor. And my last round play was 20,000 ringgit, right? So not sure how many people from other countries, but in Malaysia, 20,000 ringgit pay way back in 2008 when I resigned from Intel is actually considered pretty good pay in Malaysia. And with my stock annual remuneration is about 300,000 a year ringgit. So that would be, do I need to convert that? I'm not sure how many foreign audience, probably about 80,000 US dollar.
Yeah.
And yet, when I work out my retirement plan, I don't have enough to retire. Yeah, so that was shocking to me. Okay,
I think
that was
shocking
shocking
to
to me. Yeah,
many of us.
And it was just when the retirement age was 55 last time, and now it's 60, right? Yeah, yeah. So that was my wake-up call to take my investment and trading seriously, and I realized that there's no way I can achieve that just through working, right? Even with that gross pay. After deduct my income tax, the employee provident fund for savings, it's only left like 13,000 plus. And after I minus all my housing loan, car loan, other expenses, I can only save like 2,000 to 3,000 ringgit a month. Okay, that's not going to help me to be financially free, and that's why I took my investment and trading seriously that time. Yeah. So
okay, so the first question I have is, if I'm brand new to investing,
okay. Yeah.
How do I start? It seems like something that a lot of people do, but it also seems very mysterious.
Okay.
How do you start? How do you pick, or even how much do you start with?
Okay. Okay. So it depends on. Okay. Everyone has different affordability, but to start, I trade in the US market. So the minimum startup capital for the broker that we use is 2,000 US dollar. Right, but usually we recommend people to start with 2005 US dollar, which is equivalent to close to 10,000 ringgit. Yeah. Of course, if you have more that you can fund, then you can buy more expensive stocks. Yeah, you have more choices. Yeah. So, but the most important thing is to learn it properly and to learn how to manage the risk. I'm sure most of you have heard of someone saying, or you yourself perceive that trading is risky, right? How many of you think that trading is risky? If you think trading is risky, type of me.
Me.
Yeah, type of me. Okay. Yeah.
Yeah.
So my question for most people when they tell me that is, where does that belief come from, right? Where does this belief come from that trading is risky, right?
I think a lot of people feel that because we're uncertain and we just rely on, I'm talking for myself especially, we rely on information that we gather from friends or newspaper or whatever. We don't really go dig deep and do research. Well, I never did. So it's sort of like gambling. You're just picking a horse, a stock, and hope for the best.
Yes.
So I think that is sort of why I think it's risky.
Okay. Yes, exactly. So I'm glad you bring it up. How many percent of the people that are investing or trading in the market do you think are actually having a proper methodology, right? They have a systematic way of how to select the right stocks, right? How to build the right stocks, how to time when to buy and when to sell, and how many units to buy so that if something goes wrong with that investment, it will not hurt your account. Right, so this is a systematic approach to investing and trading, and actually cut loss when they are wrong. Right, it cannot be 100% right. Right, in the US, I chose US market because there's a default way to put a stop loss. Right, so I only risk 1% of my capital in any single investment and trade. Right, so which not all brokers in Malaysia provide that. Right, so but how many percent, just a wild guess, right, of the people who are actually investing or trading actually does that? They have a proper methodology, and they cut loss when they're wrong. Just a wild guess.
10.
Yeah, that's a good guess. Yeah, less than 10%, I would say.
Less than 10%.
Yeah.
Okay, so majority is gambling.
Yes.
Okay.
Yeah, and that's why people may not get consistent result, and because they don't cut loss, right? When they lose money, they will say that trading is risky. But there are many ways to protect your money. Right, there's a way to manage the risk. So if you don't manage the risk, then it's called gambling. Right?
So can you give us? I know this is a very complex, probably topic to learn. Take years, but can you give us in a nutshell what should be like what is the systematic way? What is the more sensible way that we should be doing it, so that as a newbie, we can at least have some guidelines?
Yes. I think we all start off with the direct. It should be your portfolio allocation. That means if you have X amount of money, right? Of course, you don't put all your egg in one basket, right? So ideally, you put it into 10 different stocks. And if any of the stocks, right, came down by about 5%, then you need to cut loss, right? So that's the basic level that everyone can follow. But if you want to follow the structured methodology, what we have a 4-step process. We call it STPM. It's actually follow our Malaysia Form 6 exam. Yeah. So the first step is selecting the right stocks. I trade the US market, right? So out of the 6,000 US stocks, right, there is actually a proper screening criteria that you put in. Example, one of it is profitability, right? Yeah. How do you measure that the company is profitable, right? There's something called return of equity, right? When I bring up this term, it seems very technical, but actually something very simple. That means for every dollar you invest, how much is the company making, right? Since we have a lot of entrepreneurs here, right? That means for every dollar of investment you put in a company, right? How much is the return? And you'll be surprised, in the US, there are so many companies are making more than 20% for every dollar you put in. Yeah, that means every dollar you put in, it makes, let's say, 20 cents, right? That's 20%. So at the end, if you can find companies like this, right, that are consistently making an average of 20% return a year, right, that means in 5 years, right, your money will double investing in the company. Yeah, so you can find this in Microsoft, Facebook, Google, right? They all qualify for this. So investing actually is not something that's that complicated. Yeah. So in fact, when I teach my students, more than 50% of our students are total newbie, right? I put it in a very layman terms to them, so that even if they don't have financial background, they can understand, right? For example, right, it's just some of it is common sense, right? You find companies that are profitable. So let's say for every dollar they make 20 cents, at the end of 1 year in their accounts, right, they will have $1.20, right? Yeah. So does it justify for the stocks to go up by that value, right? Because the company is worth more right now. It has 20 cents more in account. And if they do this consistently over the 5 years, right, they will have $2, right? So that means the company is worth $2 now. So the stock market will have to respond to that. Yeah, because the stock cannot be undervalued for too long. The big funds, right, are all ready to buy up those companies. Yeah, so that's the essence of how it works. So if you ask me what's the most basic thing is find profitable companies, so that the value of the company will go up over time.
Okay.
Right. And of course, after that, you want to make sure the company is growing, right? It's not in a sunset industry. Yeah.
Okay. We are having some questions coming in
okay,
already.
Great. Yeah.
Okay. So from Norman Wong.
Okay.
Should we go with a long-term or short-term strategy during times of COVID?
Oh, okay. Interesting question. I think going long-term or short-term, right? It's something that needs to match your investment or trading objectives. I trade both short-term and I also have investment long-term. In fact, there are 4 different trading styles, right? One is we call it long-term investing, which your horizon needs to be at least 3 years and above.
Okay.
Yeah, 3 years and above. Then there's mid-term trading, which is a few months. You ride the short-term trend until the trend change, right? So that means you look for market come down, reverse up, then you buy, and then you continue ride the trend up, and when it reverse back down, you sell it. Yeah, that's called trend trading. So typically you hold the stocks for a few months.
Okay.
Yeah. So then there's another one which is short-term, which is you buy and sell within 2 weeks, you get up. Yeah, and there's also something called intraday. Which is you sit down for about 1 to 2 hours. So as a lot of people have perception that I trade US market means I don't sleep. Okay, that's not true. US market open at 9:30 p.m. Malaysia time right now. So I need to be there about 9 p.m. if I want to trade the short term. Yeah, what we call intraday. So I have to be there about half an hour before market open. Then I stay on about half an hour to about 2 hours. Yeah, so sometimes you hit your target, yeah, within half an hour. Yeah, because what we target is about, let's say, 2% up. Yeah, sometimes 5%. That would be a bigger move. and then you just close shop. Okay.
Right.
Yeah. Then
Okay, so
if it moves like so, that's the 4 different trading style. It depends on your objectives. Like some people they don't like to be so active. They could be having a business. They are very busy with a job. Then at least you can do investment. Okay, less emotional, right? But if you're willing to invest more time to master the market, like 1 hour a day, you have 1 hour a day to understand the market. You can trade short term. It takes more practice and emotional control. Yeah, when you are trading, especially for intraday, you are making decisions as the price are moving, right? So we look at So we look at the candles, and it requires training, right? So I always encourage a student to, when they go for short-term trading, they need to practice at least 100 paper trades. Paper trades means you don't risk your own money, right? Until they can recognize patterns in the market, right? Once you recognize the patterns, right, then you can take advantage of it. The analogy is a bit like if you want to trade short term, is a bit like playing badminton.
Okay.
Right. So or ping pong, right? Table tennis or tennis, which is you need to learn to anticipate, right? So you practice enough so you know where the shuttlecock is, roughly where it's going to land, and you wait there. And so it's same for trading. I will know which level I need to wait, for the stock price to come down. And we come down to that level, I buy, and I set my stop loss and profit target, and just let it be.
Right. So it's not really about long term or short term during COVID or during a
it's
period.
not. It's more matching to your trading style. And of course, in times of uncertainty, I don't keep positions overnight. When the market is still looking for directions, I will trade intraday, and once the market has settled down, then only I trade for if the market has been penalized, I can enter for investment, right? So investment or long-term trend trade the opportunity don't happen so often. There's only like 1 or 2 times a year you have a more bigger correction, and that's the time that you want to prepare ahead all the stocks. You know which stocks you want to buy, and that's the time to buy, because sometimes the rebound can be very strong. Just like look at the COVID-19 on March 23rd. Right, the market rebound strongly. That was when I gave a signal to our student. So it's Microsoft 60% up in just 3 months.
Wow. Okay. So another question that was submitted beforehand is from Yasmin. So she asked that, is it a good time to buy Hong Kong stocks if the price is down, or the new ones that are coming in?
Oh, okay. I would say that you don't trade a market unless you're really familiar with it. There's always a learning curve. I would say among all the markets in the world, US is the most predictable in a sense that it's a very mature market. Right? Hong Kong market is very volatile. China market is very volatile. So I would say that's not for beginners. And there's more uncertainty in Hong Kong because of the US relationship with China, right? So the biggest risk for Hong Kong is when the preferential status is taken away, and that's why the Hong Kong market is not taking off at all. If you look at the US market, they actually rebound so strongly. There are not many Hong Kong stocks that are really good. Of course, a lot of them are the big ones, like if you look at the Tencent, right? And Alibaba wanted to list there, Baidu wanted to list there. Mainly because they may be delisted from the US market. Okay, so I don't like to go for stocks like that has more uncertainty, right? So unless there's a major dip, because the from my experience, 40% of the stock price movement is depending on the macroeconomics. The bigger picture, what happened, politically and so on, and the government policy, and 30% is based on the sector and industry trend. The big wave, like for example, the technology is the future, and only 30% is specific to the company. So even if Tencent is very good, but the Hong Kong market is not good, it will get dragged down, right? If the currency, right, if Hong Kong dollar get unpacked, that will be a huge risk to the market. Although the probability of it happening is low, right? But if that happens, it can be a lot of funds will get out of Hong Kong. And what if China take back? right? Yeah, so there's a lot of uncertainty around Hong Kong, but now a lot of the big companies like Alibaba, Baidu, they wanted to list in Hong Kong as a secondary listing because Donald Trump, right, is not having a good relationship with China, and a lot of these companies currently are listed in US market like Baidu, Alibaba, and so on, many other. Yeah.
Right.
But there is a ruling that says that if they don't comply to the auditing requirement, that says that they have nothing to do with the government intervention from China. That means the government are subsidizing them.
Right.
And they need to be audited from a US approved auditors. Then they can continue to be listed in US. But majority of them are non-compliant. Yeah, so they have a high risk in the next few years to be delisted from the US market. Yeah, so I would not suggest that you trade the Hong Kong market unless you are at the more experienced level to handle that. US market is still the best. Yeah.
Okay.
It's more mature, more tools for you to manage your risk. Yeah.
Okay. So to remind the audience, feel free to ask us anything. Just put it in the comments, and then we'll get Kathlyn to answer. I'm reading all the questions as we go.
Yeah.
So there's another one from Atel. For long-term investing, name 3 ratios: PE ratio, EPS, percentage yield, etc., that we should keep an eye on the most. What is the ideal number for those ratios, and any passive investing advice for millennials?
The interesting part is none of the ratio.
Oh, okay. So you don't look at the ratios.
Yeah, because I'm more a growth investor, not a value investor, and there's a distinction between the two. When you look at PE ratio, right? I know this may be a bit technical, so let me explain in more layman term. PE ratio is a very popular ratio that a lot of people are using to evaluate whether the stock is cheap enough, right? Because it's stock price, PE means P stands for price, right? So you have P, price, divided by earnings per share. That means earnings per share is how much each share is making.
Okay.
Right? So in a simple layman term is how much price, what is the stock price people willing to pay on top of what they are making for the last 1 year, right? You're taking the stock price divide by what they are making. So usually the benchmark is 15 times, right? So if they're making $1 of earnings per share and the stock price is $15, right? That means you're paying 15 times of what the company is making. Yeah, but it's a very, this PE has a lot of limitation, yeah, because it only look at the last 1 year income. When you want to invest in high growth stocks, right, like Nvidia, right, or Microsoft or Facebook, do you think is good enough to judge the company based on the last 1 year income, or do we judge based on the future? Yeah, this indicator alone only look at last 1 year, so it's not the best benchmark. Yeah, you will miss significant high growth stocks using this method. Yeah. So then the other one is earnings per share. Earnings per share you cannot compare between company, right? So if I say earnings per share is $1, what does it mean? Right, company A earnings per share is $1. Company B earnings per share is $2. It doesn't mean B is better than A, because it could cost you more to buy B, even though their earnings per share is 2. Yeah. So we look at return of equity. Return of equity is for every dollar invest in a company, how much the company is making. That is more comparable across the company.
Right.
Yeah. That we look at we look at put every company in equal state, right? Yeah.
Okay.
Then there's one more that it says, right? EPS and percentage yield. Yes. Dividends is the lowest priority you should have if you're investing in US market. I know if you're investing in Malaysia market, a lot of people look at dividend because we don't have that many high growth stocks here. If you look for high yield dividend, you will just miss most of the high growth stock, right? Facebook don't give dividend, Apple don't give dividend when they were at their best growth stage, right? So companies only give dividend typically when they reach a stage where they don't have a lot of use for the money, which means they are more mature already,
Right.
They are not doing a lot of acquisitions. Yeah. So it should not be your main target. Yeah. In fact, a lot of the best growth stock do not give dividend. Google until today, no dividends, right? Yeah, they don't give dividend. I'm not saying that Google is the best growth stock. Apple doesn't give dividend until they reach a saturation, like maturity. Yeah. And a lot of these great companies in the US, their dividend is likely, just between 0% to 2% only, but their stock price can go up like 60%. So what matters to that 5% dividend, even if you can get 5%, is not the most important matter. And a lot of people don't understand the contrast between Malaysia and US stocks, because American companies don't like to give dividends. Yeah, they do what we call stock buyback, right? So they instead of giving you dividends, which they can get taxed straight away for US citizen, right? They do stock buyback, means they let's say the company has 1 million shares, right? They buy back 10% of the shares from the market, right? So the number of shares reduce, right? Yeah, when the number of shares reduce, means each share should be worth more or less. Yeah, so each share will end up worth more, right? Let's say 1 million shares available for people to buy and sell. I know, but share buyback could be a bit technical, but the company buy back 10% of the shares in the market.
Okay.
Right? So the number of shares reduce, but the net income don't change, which means each share will be worth more already.
Okay.
Yeah, in fact, each share will end up worth 11%. Yeah? So just forget about the calculation side. So which means it will drive the share price up by, the share now is worth 11% more. Yeah. So this is the most popular way American companies give back money to the shareholder instead of dividend. Yeah.
Right.
Yeah. So don't use dividend for US shares. Yeah.
Okay.
Yeah. You can get 5% dividend in Malaysia shares, and your shares drop 10%, you will still lose money. Okay. Yeah.
Okay.
Yeah.
So any passive investing advice for millennials?
Okay, so I would say for passive investing, first you need to first screen through the great companies you want to buy, right? Then you wait for the dip to buy. Yeah, that would be the safer one for millennials if you want to really go passive. Otherwise, you need to look at stock charts to time it better.
Right.
Yeah. Right now, the market is pretty high, mainly because there's a lot of money supply in the market, right? The government is supporting the entire market. There's so much stimulus going on. And even though the market is high, the market can still sustain, mainly because money have to go somewhere. Right? This is a very interesting part. A lot of people ask me, "Oh, US market is so high, can it still go higher?" It's mainly because there's so much money supply, right? There's a few trillions dollars in the market.
Right.
Right? Where does the money go? Right? Yeah, the money have to go somewhere. They either go into stocks, or they're going to properties, right? Or they're going into business, right? It has to go somewhere, right? And stock is the better return, because if you put in a government bond, right, or bond fund, the return is so low. Yeah, because the bond fund goes by the interest rate for the country. Right. For example, the interest rate in the US right now is like 0.25%.
Right.
It's just miserable, right? In Malaysia, it's like 2%. So the money would not go there. Maybe some money that are very conservative will go there. Yeah, so you find the companies, at least, let's say, the very simple layman version is, you find companies that are profitable, like for every dollar you put in, they make 20 cents, like the return of equity is more than 20 cents, you'll be in good shape. Yeah, right. Provided you don't pay too much for it. Yeah, because naturally this company will be growing over time, right? And you choose those strong brand names where, to me, sustainability is important.
Right.
Right. I mean, this company, the business can last for a long time, and they are more like monopoly. I mean, they have a strong business mode. Right? That means it's not so easy to compete with them. Okay. Yeah, they're so big. Yeah. Right. So that would be the one. And just don't have this single baby syndrome. You buy one stock and that's your only stock. So when something goes wrong, you don't want to let it go. Yeah. Okay. So have 10 stocks, right? You can start with 5. Yeah. As you capital grow, then you can diversify. Put the equal amount. That's the simplest way for beginners, right? So if you have 5,000, put 1,000 on each. Yeah. In the US market, you can even buy 1 share, 2 share. So it's very easy to divide equally.
Okay.
Yeah.
Okay.
Yeah.
Okay. So we're moving on to the next question. So in this time, you said we had to do some homework and plan and look for good stocks. Okay. So are there any industries that we should particularly look at, like the medical world or tech?
Yeah, I would say tech is the way to go. Yeah, tech is the future. Mainly because we are using technology right now to connect. Yes. Right? It's very simple. And what else, right? Everyone has a smartphone, right? Yeah. And when you want to search for something, what do you use when you want to search for some information?
Internet.
Yeah, we
Google.
use internet. You use Google, right? Yeah.
Right.
So, what about the most common way people connect with each other?
Social media.
Social media, right? These are
Right.
all text, right? Facebook, WhatsApps, Twitter, WeChat. So how do you think people will be paying for their expenses in the future?
Online.
Online, yeah.
Okay.
So when you go out for shopping, how do you pay?
Well, here, Malaysia is always all the online payment gateway.
Either that or you use your Visa and Master for now, right?
Yeah.
But in China, they are just most of them are using QR code, right?
Yeah.
And Malaysia is slowly getting into that. Yeah. So of course, there's certain things that people will always just look for what people will spend on. That's a good start,
Okay.
right? What will people spend on? Because consumer spending is the one that drives the stock market, right? What is the stock market? Stock market consists of companies, right? Since this is a female entrepreneur company, right? So very simple. Stock market is all about stock market will go up if the company makes more money. Simple.
Okay.
Right? So when will companies make more money? When people spend more.
Okay.
Yeah. So stock market, the best way to measure stock market is about consumer spending. When consumer spending goes up, right, the company can make more money. Right. So you look for the industry where people are still willing to spend. Definitely it's not airlines, okay? Yeah. So where do you think people will still be willing to spend? So there are two types of spender, right? One is individual like us.
Right.
Right, where we like to what do we spend on? Right. Let's think about this. Yeah. Then you will see that stock market is quite common sense. It's not something that's so difficult.
Okay.
Yeah. In fact, you don't need any finance degree. Yeah.
So we just look around
look around life. I used to prompt this question, why I invest in your stock. Okay, let's first thing in the morning, what do you do? What's the first product you use first thing in the morning?
Okay, toothbrush.
Yeah, toothbrush. Toothpaste. What toothpaste is the
Brand.
most common?
Colgate.
Colgate, right? Darlie, right? They are from US. Then what does your children use, right, for their children's product?
Children's product.
Yeah.
Oh,
their body lotions and so on.
Okay.
Yeah.
Okay. Johnson & Johnson.
Yeah, Johnson & Johnson. A lot of shampoo products come from Procter & Gamble.
Right.
Like then when we go out for shopping, like we use Visa, Master. When you pay online, what do you use? When you pay online? Yeah. Those of you who are online, right? Type what do you use? When you pay online, what is the method that you use? Right? What would that be?
PayPal.
PayPal, yes, PayPal. Right. Then what are the most popular fast food restaurants out there?
Okay.
Yeah.
McDonald's.
Yeah,
KFC.
McDonald's, KFCs, right? Starbucks.
Right.
Of course, Starbucks will be the coffee chain. Subway.
Yep.
Right. Burger King.
Yep.
So where does all this company come from? It's
Okay.
US, right?
Okay.
So these are our day-to-day expenses, and as long as people are still willing to spend money on them, right? This will be the good company to invest. Of course, you still need to look at the financial. Not every company that was mentioned earlier are as profitable, so we choose the one that is the most profitable and sustainable. Yeah.
Okay.
So it's actually looking at our day-to-day life, right? We connect with our friends using Facebook. And also, we use Waze, right? If we cannot find a place, right?
Yep.
That's belong to Google.
Oh, I didn't know that.
Oh yeah, Google have bought our Waze, and what apps belong to Facebook. Yeah, so these are all the company. So that's more when you want to create some presentations, what do you use? PowerPoint, right? So we use Microsoft, right? So most people will have a laptop or a cell phone, right? So all these are tech. So this is from individual spending, right? So that will create business income. The second part of the spender comes from the corporate, right? Where do you think corporation will spend the money right now?
Also on digital.
Yeah, also on digital, right? Everyone is going online, so they have to go online. So despite the COVID-19 and so on, right, you can see the tech software sector recovery is the fastest. Yeah, because they are not so affected, right? In fact, look at the Zoom, right? Zoom shares is going up so much. Yeah, so it's because people are using technology more and more right now.
Right.
Yeah, people are talking about big data. In fact, this weekend I'm teaching an advanced course for it's called the Industry and Industry Insights. We are talking about all the future industry that's coming out, like AI, big data. right? So, and all this will drive the need for technology, right?
Right.
Yeah. And let's say for Amazon, all this online shopping to compete, right? What do they need to do? Like, since we have a lot of entrepreneurs here, right? How do you thrive, right, in the future, right? Based on the future trend, right? What do you need to have in order for your business to be competitive? Yeah, what do you think it is?
Online presence.
Yes, online presence. So exactly. So you need to invest in technology. And one of the very major trends I'd like to share with you is called hyper personalization, right? How do you because do you agree that we'll get more and more information overload over time?
Yes.
Yeah, it's
definitely.
already right. Even our email we cannot cope, right?
Yes.
Social media we cannot cope. I have like hundreds over.
Right.
I mean, so many forums, and I can't cope with all the messages. So there is a problem statement in the future, and there's this amazing statistics, right? It's the I can't remember the exact number right now. I have it in my PowerPoint. The amount of data that's being generated, not just in minutes, in seconds, it's just crazy. Yeah, and the amount of data has doubled in the last 2 years compared to what took so many years in the past.
Right.
Yeah, just in the last 2 years. So that is called, there's a lot of huge data to be managed. So over time, as a business owner, our marketing message may not reach the intended audience, right? So how do we reach them? Okay, so it's going to be more and more challenging to reach our customer,
right?
And also to retain them, right? They have so many choices in the world. So one of the important ways is to personalize it to them, so that they feel that you are addressing them, you know their needs. Just like when you go for Amazon, right? When you have searched something, they know that you have searched it, right? Yeah, and then they will keep recommending you. Yeah, for example, same thing. Okay, yeah, something related to that. That means it seems like they know you, right? So Amazon is using a lot of artificial intelligence behind the scene, and they collect your data. And so there's a difference between personalization and hyper personalization. Personalization is I may collect your statistics, right? So when you join my website, let's say when you go to Amazon, they'll ask you, okay, let's say you are female, this age group, what's your preference, right? That's the very basic personalization. But the more advanced hyper personalization, as you navigate through Amazon, it will start to track everything that you do in Amazon website, right? What do you search, right? It will track everything, and then it will record it, and it will see a pattern, and it takes the pattern to recommend to you. Okay. Right. And that's going to be very important for the future for our business to survive. Because if people are doing that and we are not doing that, then we will fall behind. Yeah.
Right. So we should be looking into those industries.
Yes. So there's two parts, right? I like one saying from Warren Buffett, which is he's a better investor because he's a business owner.
Right.
And he's a better business owner because he's an investor. So I encourage all entrepreneurs to learn about investing, because then so let's say you have a business, right? How do you make sure that your business is is highly valued, right? Highly valued, yeah. So, and I look at whatever I search for companies in the market, I always evaluate back, how is our own ROE, how's our own track record? Are we really planning for the future, right? As I teach industry insight, I say, are we really aligned with the mega trends, right? So one of the things we're going to go into is the hyper personalization, right? We have many different people, and I used to teach my own method. Then I realized it may not suit everyone, right? Some people could be investor, some trend swing, and some has more time, some has less time. How do we create an education system that can cater for people who are very busy and people who have more time, right? There's one way of personalization, right? Yeah. Then the other one is analytics is very, very important for entrepreneurs as well as the future. Analytics is when you how much information do you collect on your customer, and how much of them do you really analyze, right? Their spending patterns. Right. For example, let's say we have a course, right? Entry-level course. When do they upgrade to the next course that is more advanced? And this will help us to predict better on our the capacity for our course and capacity for our classroom, right? So sometimes it may take 2-3 years before someone go to a very advanced course like what I mentioned, like industry insights or the macro insights. So then it will be harder for me to determine, okay, when can we have a class like that, right? Yeah. So I need this analytics data, right? We need to capture them, the interval, our student behavior from one class to the other, and to know by when, right, we will have enough numbers for this class. That's called the analytics that we need to have. Yeah, and I think that's going to help us a lot in predicting the our business sales pattern, and this is going to be huge as well for future investment. Right, software is the future, right? Because every business will need to have software to manage, to be able to create this, right? So let's say you want to do personalization, you need this. You want to analyze your company performance, you need this. So what we have is we are going towards a monthly closing. Like initially it was tough, right? We want to make sure that our financial data are so close, our sales numbers are so close, so that we can get the real time. We know when we are in trouble, when we are hit, and when we are behind, what do we need to do? So it should be pop up to me rather than I have to go in and analyze something. Yeah. So since this is what will help business thrive in the future, if you are going into, this is more than early investment, where you can get into these kind of companies that are very strategic on this, right? They could be really making a lot of money. Yeah.
Okay.
So it's still tech.
Okay, good. So we have to look at tech.
Yeah.
So I know you've experienced like the full circle, the bull run, the market crash, after crash, side markets, etc. Right?
Yeah.
So we're coming up. Well, hopefully that we're experiencing this cycle in a way. So what is the strategy that we should now plan for? Are we in a crash now? We're not really in a crash.
Yeah, we are in the early correction. It is a term called consolidation, where there is some correction last week because Donald Trump started to have some tension with China again, right? The trade war, I think, is our biggest risk moving forward, which can cause some uncertainty. That's why I said, as long as all this uncertainty is the opportunity, you have to plan ahead. What type of company will thrive despite all this, right? And the 40% of the stock price will still be affected by all this, okay? But if you know what stocks you want to collect, and this is great because now the stock price is high, right? So I would foresee that it's not going to be very bullish like this month. A lot of big funds, they have already made some really good money, like 60% to 100% in the last few months since March. They'll be looking at lightening the positions before election. Yeah, so usually before election there'll be more volatility, and that's the time you want to collect. Yeah, some of the strong stocks. Yeah,
so we don't know who up.
Yeah, it's coming up. November. So early November is the election, and we don't know who will win, right? There's in the US, it's always 50-50 chance. Okay, yeah. So we want to plan is either way, right? We look at the market reaction to that, and there will be companies that no matter who win, they will still survive. Okay, and these are the stocks that you want to capture during that time. Yeah, so time is very near, November.
Right.
Yeah.
Okay.
I won't suggest to go into airlines. Yeah, don't buy cheap. That's the biggest lessons I've learned. I've met many lessons. I paid a lot of tuition fees to the market during my early days. Don't go cheap, right? Cheap companies are always cheap for a reason, right? So don't go for stocks that are still uncertain. I will foresee that even if with a vaccine, it may not be able to reach so many people in the world so fast. So people will still have anxiety to travel. Right, and the airline industry, hotel industry will take a long time to recover. So it's not worth your money getting stuck there, right? As well, go for the one that is the trend for the future, and you have less anxiety because these kind of stocks will not be affected by the COVID-19, and every dip is your opportunity to get in. Yeah.
Okay, I'm afraid we're actually at the end of our time. It's gone very fast actually because so much info and Kathlyn has given us so much insight. So thank you very much. And I hope that everyone has learned a lot. And if you have any questions that you want to continue, please comment in the comment box so that we can keep answering them. And also please join our FEW community because it's a free membership and you get much more information as we go along because each week we'll be interviewing other people, other industry experts, and you can find out much more information. So bye-bye for now, and hope everyone stays healthy and profitable as well, right?
Yeah, so just my last advice here is don't you don't have this so much fear about investing in the stock market. It is really something that's very learnable. Okay.
Okay.
Yeah. So and I feel that really, if you don't learn about these skills, you'll be always in the rat race. Yeah.
Right.
All right. So
Okay.
see you.
Thank you very much.
Thank you very much.
Bye-bye.
Okay, bye bye.